Dividend investing is no different than anything else in life. If you take a shortcut, you might get burned, and most of the time the slow and steady road to success is the way to take. But with the way the stock market has been transforming over the last few years, when it comes to dividend investing or income investing, there's so many different new high yield or ultra high yielding ETFs that offer a boatload of income with a relatively small amount of money invested. Now, some of these ultra high yielders are of course very risky, and some of them are less risky than others. And in my long-term portfolio, I do own a handful of different ultra high yielders, and I'd like to think that I own some of the less risky ones. But for this video, just for fun, I want to go through 9 different ultra high yielding ETFs that can earn dividend investors, theoretically speaking, $1,000 per month in income with a tiny bit of money invested. Now, of course, be careful when it comes to investing, when it comes to buying anything that is, but especially when it comes to ultra high yielders like these ones. But if you want to see which 9 ETFs I'm talking about and how crazy some of this math is, then make sure to stick around, drop a like down below, and let's get right into the first one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, before we dig a little bit deeper into some of these higher yielding ETFs, I wanted to go through and explain to you guys, especially for the newer investors watching this, why even invest into higher yielding ETFs in the first place, and if or if not, they might be right for you. Now, throughout my portfolio, as you can see right here, I currently own tons of low yielding growth potential names like Apple stock, for example, but also some higher yielding names like QYLD. And this is because for my specific investment strategy and my specific investment objective, I want to own names that are going to grow over time, but I also want to own several different stocks and ETFs throughout the market that are going to pay me a substantial amount of income ASAP. And this is because for me personally, as a 32-year-old investor, I do want to use some of, if not all of my dividends sometime in the future, in the short-term future that is, maybe the next 2, 4, 6, 8 years, and use this cash flow to pay for things like bills, expenses, and or to help out family and friends. Now, because that's my specific objective, utilizing a portion of my portfolio and buying into higher yielding assets can be very helpful, especially because these higher yielding names generally pay a lot more income a lot faster. So just to start things off a little bit on the slower end, and as the video goes on, things are going to get crazier and crazier. But one of the ultra high yielding ETFs that I personally own in my portfolio, and I do believe in, but of course I could be wrong, is SPYT, or the Defiance S&P 500 Income Target ETF, which yields around 20%. Now, the way this ETF yields so much is because it utilizes an interesting income generation strategy. It generates income through option premiums derived from selling index call spreads, the primary driver of the fund's yield. They sell at the money or near the money call spreads to retain upside growth potential and of course aim for 20% yield, which is massive. Now, because SPYT, for example, pays around 34 cents per share per month, what we would do is we would take $1,000 divided by the monthly income payouts, which means in theory we would need around 2,900 plus shares of SPYT in order to earn $1,000 per month in income. Now, because this ETF costs around $19 or $20 per share, you would need to buy around $56,000 worth of SPYT in order to hit $1,000 per month in income. But like I said, as we go on through this video, we're going to go through crazier and crazier ultra high yielders, so hang on tight. Next up is ZVOL, the Volatility Premium Plus ETF. This ETF shorts the volatility index, and at least historically has offered a boatload of income from doing so. This ETF over the last year or so has been paying around 48.5 cents per share per month. So that means that in theory, if an investor wanted to earn $1,000 per month with ZVOL, they would need to buy around 2,061 shares of it. Now, because it costs around $20 per share as of right now, an investor would have to buy around $41,000 worth of ZVOL in order to have a recurring $1,000 per month payout. An even higher yielder than that, though, is AIPI, the Rex AI Equity Premium Income ETF. This ETF buys into AI stocks, then writes covered calls, and earns a ton of income by doing so. Now, because this ETF pays around $1.49 per share per month on average, in order to reach $1,000 per month, you would have to buy around 671 shares of it, which it currently costs around $50. So we're talking around $33,000 invested into AIPI, and that could potentially earn you around $1,000 per month. But what about AIPI's brother or sister FEPI, the Rex Fang Innovation Equity Premium Income ETF, which is very similar to that of AIPI, only the difference is FEPI buys into big tech instead of AI. Now, FEPI also pays a massive amount of income on a monthly basis, around $1.10 on average. Now, because FEPI costs around $50 per share and you need around 900 plus shares, you would have to spend around $45K into FEPI, which still is not that much money relatively speaking, in order to earn $1,000 per month in income. But we are about to get a lot crazier talking about XDTE, or the S&P 0DTE Covered Call Strategy ETF. This ETF uses a synthetic covered call strategy that seeks to provide current income on a weekly basis while also providing exposure to the price return of the S&P. Now this ETF, along with QDTE, which we're going to go through in a second here, utilizes this 0 days till expiration strategy in order to earn a ton of income on a weekly basis. And yes, I said weekly, this ETF pays out income every single week to investors. Now it's hard to say exactly how many shares of this one you would need in order to earn $1,000 per month because their payouts are sort of all over the place, but just based off of the recent payouts, you'd probably need around $50,000–$60,000 in order to earn $1,000 per month. Now, more or less the same exact amount would probably need to be invested with this other ultra high yielder QDTE, which is very similar to that of XDTE. Only difference is this ETF utilizes the Innovation 100 instead of the S&P 500. But if you're still watching the video at this point, now we are getting into the absolutely crazy stuff. CONI, or the YieldMax Coin Option Income Strategy ETF, which has a distribution rate of over 125%. This ETF as of recent paid out $2 in 1 month and then $1.34 in 1 month. And this is all for an ETF that costs around $14 per share. So if CONI on average pays out around $1.70 per share per month, and again, all these things can change, I'm just basing off of the past several months. That means you would need to buy around 588 shares of CONI in order to earn $1,000 per month, or spend around $8,200 investing in CONI. And then theoretically, just based off of the last few payouts, anything can change of course, you could potentially earn $1,000 per month. Now, when it comes to YMAX, for example, the YieldMax Universe Fund of Option Income ETFs, this ETF also pays out a massive amount of income. The difference is this ETF pays out weekly. Now, in order to earn $1,000 per month, more or less with this ETF, you'd probably need to invest around $20,000, $25,000 into it. But again, it's very hard to say because the payouts are not necessarily consistent. Either way, though, a relatively tiny bit of money in order to earn $1,000 per month. Now lastly, maybe the king of income ETFs, at least as far as insanity goes, MSTY, or MSTR Option Income Strategy ETF, which has a 136+% distribution rate. Now look at this ETF's most recent distributions. We're talking $3.08 per share on a monthly basis, $4.42, then as low as $1.85, which is still insane, but anywhere from around $4 to $2 if we were to consider a $3 payout per month when it comes to MSTY. You would potentially only need to buy around 333 shares of this ETF, which currently costs around $30 per share, which means you'd probably only have to buy $8,000, $9,000, $10,000 worth of it in order to earn $1,000 per month in income. Now, even though I share with you guys several different ultra high yielders that at least historically, at least as of recently, have paid a boatload of income per month or even per week to investors, it doesn't mean that these ETFs are worth investing into, and it doesn't mean that the risk is worth the reward. But either way, I do think that a lot of these ultra high yielders are a ton of fun to watch and see what they're going to do next, because at this point in the market, when it comes to these income-oriented ETFs, this is really untouched ground. But now, before I go, I have one more question for you guys down below. If I were to ask you what's your favorite ultra high yielding ETF as of right now across the market, what would it be? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.